Glad to know you're still with us. Mukhtar, I'd like you to land on your thoughts before we check out the price-to-earnings ratio and some other things. Mukhtar, if you can hear me, do go ahead, please. All right, let's go to price-to-earnings ratio now. For price-to-earnings ratio, Unilever minus 198.10. For PZ, 28.02. For UAC, minus 13.04. For Nestle, 23.99. For Cadbury, 7.74. I'd like to start with you, Ambrose. You laughed.
No, looking at the P ratio, P ratio for me is just a simple of telling you how long it will take you to recoup your investment. And for matured investors or trader, look at it just as a guide. For you to do really evaluation, you don't look at only the P ratio, but give you an insight as an investor to see, oh, it's high or low. But most time, because they are dividend paying stock, their P might also be high, but still have opportunity to pay a good dividend. But for why I laugh at that, I saw about 198 for for Unilever. If we are going by that.
So it means technically it requires over 198 years.
Yeah, technically that's why
to recoup your investment.
Exactly, that's why all things being equal, if they remain at this level, but if they improve in the next quarter or next year, we're likely to come down. That's why I just laugh when you just. But the good thing is that if you look at what Cadbury is about 7.71, it's a good one, and followed by also Nestle. For me, this I talk about. Say it all that it is the earnings that really matters, especially if you are an income investor. But for those that are capital appreciation, I don't want to look at the period. That's why I mentioned, because I want to say, oh, how long do you take for me to recoup my money and all those stuff. But for dividend income investor, these figures are okay. But because of the nature of the economy and the high cost, that's why we are seeing that this thing are quite high. Because if they are having a higher earnings to further also, but for me, if you look at what Nestle is doing now, as at the time this was computed, Nestle was around 1,000, almost 270. As I speak now, it has gone below 1,000 naira. That it becomes cheaper now for people to look at, because this company are giving you already 25 naira into dividend. Because it has marked, I didn't commend it for now, but I believe for the full year, expecting more than 30 to 40 naira. For me, if the price comes as low as 800 naira, it's a long time to jump because they are consistent in their payout. These are the things that investors should look at.
All right. Well, very quickly, book value per share. For book value per share, Unilever 10.89, for PZ 9.83, UAC 16.70, Nestle 52.07, Cadbury 8.26. Aruna, talk to us about this.
I think with figures that we have here, actually speaking, one of the things that are low, we see that Unilever is having 10.89 for book value, but having a negative of P ratio.
Yeah.
I could not marry them because I do not know how long that it will take them to reverse the negative of 198 P ratio before they become positive. I believe if I have any money to put into this stock, I will look more into Nestle. Why? Because Nestle is a value stock, irrespective of the fact that it is used to trade over 1,000, and I think it's closed 963 today. So I think I will skew my investment will be skewed to a Nestle Cadbury. For PZ, I will excuse PZ because we are actually looking at PZ quarter one.
Yes.
But I believe by the time we get to quarter three, the figures that be emanating from PZ will be better than this. But the only problem I have with PZ for a number of times now, at the end of the year, there must always be disposal of an asset that normally reverse their result and give them the opportunity to pay dividend. That's the only reservation we have for PZ.
All right, thank you so much. Very quickly, we'll go to profit margin now. For Unilever, minus 0.54. For PZ, 4.76. For UAC, minus 2.58. Nestle, 12.04. Cadbury, Nigeria, 6.62. Mukhtar, let's have your take on this. If you can hear me, Mukhtar, let's have your take on this. All right, Charles, talk to us.
Yes, looking at the profit margin, well, it's obvious. Once you have seen the top line and you are coming down, of course, everything will follow suit. Yes, okay. Yes, it's obvious. Nestle, 12.04, Cadbury, 6.62, and the negative there is still the negative. The UNILEVER and of course the UAC. Yes, we want to encourage companies to continue to be in operation in Nigeria. We will not just write them off because UAC has shown to be a very good company in the past, and we believe that with some little management restructuring, they will come back. Yes, for CADBURY also, for UNILEVER, yes, having a negative profit margin is not really too good for investors. But again, we'll still continue to appeal to the management to see how they can reverse this figure. Yes, I will go for Nestle with this kind of figure, and of course CADBURY. I think investors are really ready to reap what they have sowed. So they should just I don't do this normally on air, but I would say they should increase their stake in those two companies. In Nestle.
Yeah.
All right. I think this will be a very good place to end the conversation for today. Many thanks for joining us. Thank you, Ambrose, for coming on the show.
Thanks for having me.
All right. Thank you, Charles, for coming on the show.
Thank you for having me.
All right. Amina, thank you so much for coming on the show. It was a pleasure having you and listening to your thoughts.
Pleasure.
All right. Many thanks to Mukhtar and Abdul Rashid for also joining us on the show today. Many thanks to you for joining us. My name is Perpetua Fasami Peter. To enjoy the weekend, till we'll see you again. Bye for now.